From the New York Times, at the end of November, Wikileaks director Julian Assange said in an interview that he intended to, quote, take down a major American bank, widely presumed to be Bank of America, by revealing what he called an ecosystem of corruption with the cache of data from an executive's hard drive. Since then, a team of 15 to 20 top Bank of America officials has been overseeing a broad internal investigation, hunting for any sign that its systems might have been compromised. Assange's threats have grown more credible with every release of secret documents, including those concerning the dumping of toxic waste in Africa, the treatment of prisoners held by the United States at Guantanamo Bay, the wars in Iraq and Afghanistan, and most recently, a trove of diplomatic cables. That Assange might shift his attention to a private company, especially one as politically unpopular as Bank of America or any of its rivals, which have been stained by taxpayer-financed bailouts and the revelation of improper foreclosure practices, raises a new kind of corporate threat, combining elements of law, technology, public policy, politics, and public relations. Last month, the bank bought up web addresses that could prove embarrassing to the company or its top executives in the event of a large-scale public assault. But a spokesman for the bank said the move was unrelated to any possible leak. Then, on December 18th, Bank of America may have antagonized Assange further when it said it would join other companies like MasterCard and PayPal in halting the processing of payments intended for Wikileaks, citing the possibility the organization's activities might be illegal. The financial markets took the threat seriously. Bank of America shares fell 3% in trading the day after Assange made his threat against a nameless bank. And while the stock has since recovered, the prospect of a Bank of America data dump from Wikileaks remains a concern. The Times says one possibility is that the documents could show unscrupulous or fraudulent lending practices by Countrywide. If that is the case, it would not only reignite political pressure on Bank of America and other top mortgage servicers, but it could also strengthen the case of investors pressuring the big banks to buy back tens of billions in soured mortgages.